Welcome to the Commonwealth Home Ownership Podcast, the real estate investing podcast for Canadians. Whether you're a seasoned investor or just getting started, you've come to the right place. If you're looking for a way to take control of your life through real estate investing, stay tuned and be sure to join us at cwho.ca, your hub for all things real estate investing in Canada.
Welcome everybody to another episode of the Commonwealth Home Ownership Podcast. I'm Brad Price, the CEO of Commonwealth Home Ownership. Joined with me today, as always, is Phil Wong, the president. And today we have Carleen Sue from Tru Capital. Carleen, thanks for joining us.
Oh, thanks for having me. Yeah, excited to be here.
Great. So Carleen, tell us a little bit about Tru Capital.
Okay, yeah, that's the firm that I opened. Basically, I mean, we've been operating for the last 3 years, but I've been investing over the last 18. But really, what we do is we help other people kind of diversify their portfolio and invest in real estate. So we find high performing investments for them and manage it through the whole investment period and giving them kind of superior returns. So
18 years, that's awesome. So Carleen, how did you get started in real estate?
I got started pretty early, like even out of university. I remember being slightly interested in real estate, and I honestly can't even remember that much, but I think it's always kind of intrigued me and always thought it kind of made sense. And even out of university, I took this one course. It was like a 2-day thing, which actually I found out later was kind of the precursor to the RAIN property ladder. So it's funny how I end up coming back to it. But yeah, that was my introduction to it. And I bought my first real estate investment, an up-down duplex, when I was like 24, I guess. And in the 2 years that I held it, we were able to double our money because at that time it was just good timing. The market in Calgary was just blowing up, and it just gave me a really good taste of, I guess, the power of what real estate can do.
So from that point 18 years ago,
yeah.
I mean, talk us through, the start. Like, how did it all really actually start? I mean, you see the power of real estate and you get excited, but I mean, it's not necessarily just as easy as that, is it? So
Right.
Yeah. So talk us through the start and how you've gotten to where you are now.
Okay. So yeah, that was the start. And so I think that was the start that made me realize, honestly, when you have something that you could leverage and something that has appreciation, it's just a more powerful investment vehicle than other ones. And I mean, I still invested in stocks as well. But then, I went to university, did schooling, did university. So when I got my corporate job, it was still more about, climbing the corporate ladder and growing my family. So at that time I was doing that, we were still invested passively in some condo developments and limited partnerships. So that journey was still continuing. Like I was still gaining some more experience in real estate. But, even when I was in corporate, I was, I'd always wonder, like, is there something else I could do? I think that entrepreneurial spirit has always been there. I kind of thought about other things. And then it wasn't until I think in 2013 when we decided to do the market was lower then, and we knew that there was some value out there with some properties. So we did a flip on a infill duplex, so both sides. And so then we kind of got more actively involved. And when I say we, it's me and my husband, we both run this company. And then we bought our first 2 rentals, and then we joined RAIN. But what was so interesting was just, I guess, in that time, I was, every time I came back from mat leave, because I have 3 children. So every time I came back from mat leave, I was getting a bit further away from what I enjoyed doing. Just because that's just sometimes what happens. You leave a post and then they give you what I mean? So that, plus the fact that I also felt like I wanted to hang out with my children more. I think that just made the desire for me to look at real estate as an option became more serious. Yeah.
You mean so every time you came back to your corporate job, you were further away from what you liked? Is that what you meant?
Further away from, not necessarily backwards, but more further from what I felt like I wanted to be doing.
Okay.
And it, you know, it's a bit of the job change, but a bit of kind of my mindset change, like my priorities with wanting to spend most of my day with my kids, or at least more time with my kids than at work. And so I think with that clarity, or at least feeling more of that desire, you know, I joined the Ray Network, and that's where I had met Brad actually, and you know, and I really enjoyed that. I think it was a good place for me to at least get focused on what I wanted, and even if it was just like the monthly meetings and, you know, the twice a year conferences, that helped me stay focused on, you know, my goals. And I decided that, yeah, I'm going to kind of build this. And at that time when I was still working, it was still just maybe 1 or 2 a year just with us. And it wasn't until it was just clear that I needed to move on from corporate and just focus on real estate, that then things really start to grow. And I, you know, just helping others do what I do has been really the, I guess, the key factor in the growth.
Carleen, I mean, a lot of people, when they first start getting into real estate investing, the hardest part is how to get started. Getting started is the hardest part. So I just want to back up a little bit. How did you get your very first investment when you were at 24 years old? How did you afford to purchase that investment? I'm just curious.
You know, I mean, I was lucky. My parents gave me the seed money. So, you know, I'm Asian, and it's nice that we still lived with our, like, I mean, coming out of university, I was still living with my parents. And so I think it wasn't a big deal for them to say, okay, yeah, like it makes sense. They wanted to help me out. And so, yeah, was able to repay them back and more. But that, you know, honestly, like that's, and I can't say that everybody has that opportunity, but, you know, I think if somebody's serious about kind of, they have to listen to their gut a bit, because I think for me, I was listening to my gut back then. I don't think there wasn't past experience that said this is going to work for sure. You know, I think even my parents at that time was thinking, are you sure you want to? And so I guess aside from the money part, and that's the part where, you know, for somebody starting, they would still need to find that money. And I guess if it's important enough, you will find it, whether you have to pay somebody back and, you know, with interest, etc. Like, you know, that money is there, but you have to, I guess the key thing is you have to want to do it. You have to take the action. You can't just kind of say, oh, well, maybe I should. Like, I remember like that poor realtor, because he was great. He took me to so many, right? And, you know, with your first property and you're trying to figure things out, whether it was because I was young or whether even if you're just starting out now, it's like you really got to know your stuff. Although we saw lots of houses. And yeah, and I guess once you start taking action and you start getting familiar with the numbers, and then you know what you should be looking for, and then finally I pulled the trigger. And I guess that's, you know, maybe that's too simplistic, but that's how I remember it.
Okay. I mean, sorry, go ahead.
No, you go. Finish your thought.
No,
please.
I mean, it's just like, just, I mean, I guess I started somewhere similar in a way, right? Like but in terms of knowing that you just have to pull the trigger, I think I can relate with that, because I had to borrow money for my first investment. I didn't have enough of a down payment. I didn't want to pay CMHC at the time. And I mean, you know, looking back, I probably should have gone for a CMHC mortgage, just because I would have had to put less money down and all that stuff. But yeah, so I had to borrow money and then pay it back. But it still, you know, at least got me into the market, got me a deal, and then, you know, everything just kind of snowballed from there. So I can relate. Yeah. Yeah,
no, exactly right. It's like that first deal. Yeah.
I think there's a couple of key elements there too that you touched on, and the first one is the educational factor, and you know, just doing courses and educating yourself with content and material to be able to go and execute confidently. But then also the mindset component, you know, and maybe this relates a little bit more to preparing yourself to move on from a day job and move into full-time real estate, so to speak. Or maybe it's even just pulling the trigger on the first deal. You know, you can analyze, but eventually at some point you have to actually pull the trigger and do it. But from your perspective, I mean, you started fairly young investing in real estate. How do those two things play into your personal development to enable you to get to where you are now?
Huge, actually. I mean, I actually really love the self-development component of real estate investing, because I think in order to be successful in real estate, or get to your goals, you do have to work. It forces you to work on all the other things. It forces you to be uncomfortable at times, to push yourself to do things that, hey, you wouldn't otherwise do. Like, I mean, I'd be more comfortable probably just watching a Netflix movie, probably. Well, back then it was probably a blockbuster movie, but I'm just saying, like, yeah. And then the education component is what really helped, because there's the tactical stuff, but there's also, if you take the time to learn the other stuff, the mindset stuff, all of that contributes. There's never just maybe one thing that I read, one thing that affected the one thing I did, but it's everything together. All of those things that you talked about, Brad.
Yeah. So I mean, what helped you gain clarity on this is the path I'm
Right.
going to go down? Like, how did you get to that point and then make a conscious decision to go for it?
So good question, because I guess, the funny thing is, when I look back, when I was even early in my career, when I was kind of just itching to do also something extra, like not necessarily change roles. It was more, what else could I do? Like, I was thinking, like, should I do a cleaning company? I just wanted to have a little bit of a company or something that I would personally operate or run. And so then I kind of ignored that stuff. You get busy with the career, you get busy with the family, and that takes a whole lot of focus. But then over time, I think when you start feeling that a bit of dissatisfaction, that actually is something you should be listening to, because if you were truly doing what you were meant to do, you wouldn't be feeling that. So I think looking back, I really do encourage people to, you can call them different things I've been named, but like, to me, they're whispers. They're kind of telling you, and you can ignore them. They're quiet enough that you can ignore them and move on. But if they're there and you pay attention, then it's actually kind of guiding you. But this is in hindsight. I mean, at the time, I think I just did what was practical. I kept with my well-paying, oil and gas job, and just did that. But I think things happen for a reason. And so when I was getting further away from really like the kind of roles that I wanted to do, the kind of things like activities, then it just made it really clear that it wasn't that. But when I had the option to look at other things, I was like, I think real estate, maybe this is the time to just really take that step and focus on that full time. And the mindset shift I had to make was, what if I always thought before, what if I would never be able to make as much as I do now in my job? That's the thinking.
Mm-hmm.
But I had to change, and I had to ask myself, what if, and I opened up to the possibility, like, what if I could make more? And it's not like I really could figure, I'm like, if I could make more, maybe I'd need like X number of units, and I would think that was impossible. But actually, whether I knew exactly how or not, I think that was what made it a possibility for me. Like, just kind of thinking, well, I would never make that move if I thought to myself, I can't do better. But if I thought I could do better, then that will allow me to take the actions I need to make it, to make it a go.
So at that point, at that inflection point where you decided that you will just go full-time real estate, like, what did you take into account in your personal life that allowed you to take that step? Like, what was there anything that you had to consider in terms of income, in terms of where your family was, in terms of stability, to be confident in taking that step? Or was it a leap of faith?
Mm-hmm. Oh, I think it was a leap of faith. I will say that, because, I mean, if there's people, I mean, you talk about real estate being passive, but it is actually a very active type of a business. And number two, doing, certain strategies, it does take a while to build all that up. So I was lucky in being in the position where my husband was still working full time, and he still is. So that gave me that freedom to take that leap of faith and kind of just follow my heart. And even then it was scary. I had worked with Brad early on and just really trying to determine, okay, is this where I wanted to focus? And that was really helpful, though, because when you speak to somebody that already is a few steps ahead of you and then can provide that clarity, it's just truly helpful. Like, you know, sometimes when people get all jumbled in their head, what they shouldn't be doing is just kind of not taking action, and just kind of being in that space, but instead reaching out and getting different feedback, and then, you know, taking accountable action and steps, then I guess leads me to achieving results. And with achieving results, you get more confidence in yourself. And then with more confidence, you're able to do more. So I guess it's like that circle.
Yeah, and Carleen, you touched on something about your job, and I think this is a really important fundamental to talk about, and it's quite simply one word: it's happiness. And you know, when you start to notice unhappiness in yourself, just quite simply because not necessarily because you dislike your job, but it's quite actually more related to the fact that you're just not doing what you actually would like to be doing, you know. And I think it has its varying levels. It has its varying levels whereby, you know, if you actually don't mind your job, the level of unhappiness might actually be quite low, which enables you to keep doing what you're doing, because there is benefit to having a job. There is benefit to having that income and that proof of income, and to utilize that for leverage to continue to buy real estate. Like there is genuine use for that. But I think it's worth talking about, you know, the flip side to that, which is really being quite unhappy because you really don't like what you're doing and you really want to be doing something else, whether it's real estate or anything else, you know. So and the reason I kind of go down that path is because I feel as though this is something that, you know, people that really want to do real estate, you know, they're really passionate about it. That's kind of the starting point, you know, is getting excited about it, getting a property or two, and then realizing, oh, well, yeah, it's a little bit more active, and I actually need a lot more property than I thought.
Right.
And you know, so there's just so many points that I would love to touch on. But, you know, you talk about whether you can make your income. So can you quit your job and make the same income? Well, another way to look at it is, can I restructure costs? You know, can I restructure some costs so I actually don't have as much expense to cover, so that I can move into real estate full-time earlier and cover my lower costs, rather than trying to replace your current lifestyle. You know, there's a few different ways to kind of chop and change that, but a support system is really important, and having your spouse on board and being there to support you through is really a key component. You know, if your environment is you've got some kids and a family, or you know, you've got a couple of properties already and you've got expenses. Maybe you don't have kids yet, but you've still got life expenses that you need to take care of. So there's still an element of analysis that needs to be done before you can go take that leap of faith. But I think it's key that everybody in your circle is on the same page. And if you need to reach out for some help, go reach out for some help.
Yeah.
And get yourself to that point that you feel good about taking that leap. But not only that, while you're in midair, you can pick the phone up and make a call to say, I'm in midair and I'm not sure I'm going to land. You know, can you help me through this?
Totally. Yeah, I agree with all of that, right? The support system is huge, and I'm totally grateful for that, because I don't think it's not everybody's in the same situation. And then if you aren't, then, you know, there's things that you could do to make sure even that you can get alignment, and then, you know, things you could do to make sure that, hey, you're leading them down the path that you want to show them. But totally, I think if I think back, I mean, even if there was that leap of faith, it was scary. You know, and there was a lot of work to be done. Like, I mean, you know, if I think back, it's like, yeah, there's still tasks that you do, right? You just, even when you've got a full-time job, you know, at the end of the day or on weekends, you're still checking out properties, or you're still making the time to do those networking meetings. So that, you know, when I was there, I was like writing my to-do list, as like, even if I took 3 hours that night to attend this meeting, then I would be sitting there. And as I'm listening, I'd be writing my adding to my to-do list, right? And then eventually I realized what I needed to do too is whenever we had those monthly meetings, I needed to book a half day off the next day so that I actually could accomplish them like right away. So those were just, some of those just things that you don't really necessarily think about too much, but probably added to everything.
Quick question, Carleen. When you took that leap of faith, was there anything you felt you had to give up or sacrifice in order to kind of in that transition? Because by leaving your job, did you have to give up anything before you? It sounds like you're doing better now, and I'd love to get into what on the projects that you're into at this point. But at that point,
I don't know if I felt that I had to give up anything, but I remember it wasn't like, oh, I'm for sure going to do this. This is totally going to work. Yeah, like go me. Like it was totally not like that. It was like, I think this is what I should do. This is, the right time. I felt it. I had come back from my third mat leave, and then it was like, this is just I did feel the sense that there was probably a new beginning, but I guess that was more the feeling. I don't think I felt like I had to give something up. But in terms of throwing myself into something new, though, I mean, it took a lot of time. Like, I mean, I spent a lot of time just kind of really getting into it, like more seriously, like, and then you're setting up your business, and there's so many things as an entrepreneur you need to do. You wear all the hats. So I guess what I did give up was definitely like some of that time. And sometimes you think, okay, like maybe real estate will give me more time with family. But the funny thing is, I mean, I love it. So what I've realized is I love it so much, and I'm actually not spending less time. But what I am achieving is I'm spending the time on my own terms. So, hours wise, I'm definitely spending the same amount, if not more, doing what I'm doing in my business, but I love it. And then number two, it might be more like I'll wake up at 5 a.m. sometimes to get stuff done out of the way, but I can still have breakfast and take my kids to school and pick them up and maybe take them to an appointment or two. And I feel like totally free to do that. So that's been a great, I guess, a benefit for sure.
And that freedom, right?
Yeah, that freedom. Yeah, for me, actually, everything is not about wealth. It's actually, for me, it's freedom. Yeah.
Mm-hmm. Yeah, being in control of your own time and how you allocate that time.
Yeah.
So in terms of, having the confidence to just go all in, essentially, really is what it comes down to. But I mean, it's not like you plan and mitigate all the problems that then arise. Like you said, like being an entrepreneur, you wear a lot of different hats, and the next day after you're like, hey, I'm done with the day job, I've put it on the shelf, and you start the next day with your new career that you've taken a lot of time to think about. I mean, there's so many new problems and issues that jump up that you have to deal with, and you have to actually develop an ability to take them on and get over them. If the hurdle pops up, you've got to work out how to jump over it, or else you're going to end up in a position where you're back looking for another job. I mean, how do you deal with that?
Well, I think it's kind of, as you put it, it's those are just hurdles to me. Like, I guess it's more like, okay, it comes up, and it's more like, okay, I've got to problem solve, figure it out. But nothing has ever been so big or unfixable or unsurmountable that I actually thought I'm going to go back into the corporate world. That was never even a consideration, because it's like when you make that commitment, then you just do it, I suppose. Yeah.
So after you quit your job, then what became your focus after you no longer had a day job? Actually, I also, another question I really want to ask before that, sorry. How long did it take before you decided to go full-time to real estate? When you started, from the time you started investing to the time you actually quit your day job, how long did that take? I think that's a lot of questions I get. That's a question I get a lot. Like, how long does it take to quit your day job when you start real estate investing?
Okay, well, so we were always investing passively, and then we started building up a portfolio in 2013. So it's been like 8 years, and I think so. I mean, we were not overly aggressive. We were just adding 1 to 2 ever since I think 2014. And so, and we felt comfortable with that because at that time it wasn't to me, I don't know that my desire was to quit my day job, I have to say, like while we were doing that, because we were actually pretty decently happy. Like it really gave us a stable lifestyle, and we were growing, our family. And then, it was nice. So I would say that it wasn't a strong desire, but as I was getting near the end of it, where, when I had my third child and wanting to spend a bit more time with them, that's when it became more of like, okay, hey, like now this is, when can we make this a possibility? So, I mean, it'll be different for everybody. For us, I guess that was, since 2014. So we'll say that's like 7 years. And definitely like even just in this last year, we've grown our portfolio quite a bit more. I guess almost double, actually, pretty much. But I would still not say that I'm at that state where I've replaced my income. But at the same time, what's really interesting is when you're in it and you're actually like, it isn't always just what you think, and you have to add it that way. It's like, I started thinking about, okay, where else can you make money in real estate? And that's kind of led me to kind of where I'm focusing on right now. But does that answer?
Yeah.
Yeah.
Sort of. And I guess that leads to the question then, what are you focusing on right now?
Oh, well, I guess with my company, like we've always done buy and holds, and really finding the good investments that can be well managed and sustain, that attract really good quality tenants, because those are kind of the key things when you're doing like a buy and hold portfolio. You're really gaining your wealth from paying down the mortgage over time.
Mm-hmm.
But as I was doing that and doing some active strategies with renovations and then putting in basement suites, legal basement suites, that worked out really well. And that's still our sweet spot, because truly, that's how you can get really good cash flow through any market cycle. And I've been through a number of them. But now, I guess to further that a bit, I guess a version of a really big active strategy is to do the developments. And that's what we've got in store for 2021 is a couple of row house, kind of multi-townhouse developments on the go. They're currently with the city right now, waiting for approval. But yeah, and I think I'm happy to provide those, because I really do think you get all components, in this market where it has been sort of flat for appreciation. This is a way to actually force that appreciation at the start, but also get the long-term benefits of holding it as a rental.
So Carleen, how did you go from doing suited properties to doing your developments that you're working on now? Like how did that transpire? Because I mean, some people are probably thinking, well, I'm doing suited properties right now and I'd love to do some developments. Like how does somebody go and do that?
Well, I mean, let me just see here.
I mean, you talked about investing in an LLP in the early days. I mean, did you learn from doing that?
I think so. I think that actually all helped. I think that made me less scared to go into that. Like, I think that there's a big sometimes jump from doing like a simple JV agreement with a suited, single family home to now offering like, setting up a limited partnership and then offering, share units and then doing it that way with a commercial build. So yes, there's a big jump there. And I think part of it was, we did have a friend who's an architect that does a lot of like redesignations of land use and multifamily designs. And just because we're already in real estate investing and he's in that same area, we've had conversations, and it just made sense that we do something like that and actually take advantage of knowing what to do. So I mean, it takes work. Like, you have to actually know which lots are able to build this. You can't just go and buy any lot and then think you can develop that. You have to know that it has to be zoned, in our RCG or multi MC1 or something or MCG to be able to build the larger number of units. And then you have to know what some of the requirements are to build them. But that's how I guess I got and when I ran, and I'm a numbers girl, like, I mean, my role in corporate was like finance doing like financial evaluation. So it was natural for me to want to put these new numbers into a spreadsheet and then figure out that. And when you're changing, like when you're taking a lot that had 1, possibly 2 units and making it into an 8-unit lot, well, there's definitely, money to be made doing that.
Yeah, and I think it's important to note as well that even though a lot may not be zoned for the project that you want to do, there are occasions where you can actually have it rezoned, but there are also neighborhoods that won't allow you to rezone to do the project as well.
That's true. Yeah, and there are some communities that actually are really against, like they have a strong pull, and they're really against it too. So I mean, I guess if people are thinking about developments, one thing I would keep in mind is like there's a lot more regulatory stuff you have to go through. It's not as simple as doing just like an infill development. Which had already had done as well in Edmonton, but like when you're doing larger ones, when you're anything that's multifamily, the process is longer, and there are, I would say, some more risk there in terms of and timing. I guess you got to budget extra time to make sure that you can jump through all the hoops and do all of the community engagement, and also with the financing too. Like doing a commercial project financing is a lot more involved than getting a residential. So all of those things, yeah.
So what are some of the hoops that you've had to jump through recently on some of these projects? Are there any pitfalls to watch out for?
Yeah. Say for one, if you're planning on doing a development, you really should be registered. Get a GST number right away. If you're dealing with new product, because then that way, when you get charged GST for the services you've paid for, you can then reclaim that with the CRA. I think it's the ITC, so that a portion of that you can get back. So that's big. I mean, I don't know that that's all like readily available. Like it's probably available, but if you don't know to look for it, how would you know, right? So there's stuff like that. When you're doing like a larger development, you really do need to, I guess, plan for a larger cash availability. Like, I mean, if you're planning to raise it from other people or not, like you should raise more than definitely the 20%, because a construction loan, if you're doing that, typically requires 25 to 30%. So, and then also with construction loans, they come in draws. So you don't always have all of the cash there. So you have to do a lot of like money management and making sure that you're really organized with a schedule to make sure that you can take care of business, right?
Well, that's a really good one. Maybe we'll jump into that one a little further. So typically in your experience, is it fair to say that the construction loans are up to a certain value of the land to start with, and then you've got the actual construction portion, which are you typically covering the cost of the construction and then applying for a draw? Like, are you having to pay trades to get your project to a certain milestone and then apply to get some funds from the bank? Like, how does that process work?
Well, yes, you do. Like, I mean, the bank gives it to you based on certain stages of development. And so, you're just, what you have to manage is making sure that the first fee, I guess, that the bank gives you is enough to cover it. And if not, you really should be using also like other sources, such as like a line of credit and, even your credit card, as long as you can pay those balances right away. So it is using your sources to make sure you can work it all out, because that is important. Yeah. And you want to make sure your trades are paid, because they're the ones that's progressing your project. So it's super important to pay your help. Yeah.
Yeah, you need to get them to get you to the next milestone so you can apply for the next draw.
Yeah. Sorry, go ahead.
No, go ahead, please.
I was just going to say, like, I was thinking of a couple of things that might be helpful is that in like larger developments too, you really, I guess, should set aside, there's a more planning and development component, a bigger one. So, and all the numbers are larger too, right? Like whether you choose to use an architect or a planning firm or, like that, there's a fee for that. There's fees for, like I just recently paid almost $5,000 for an engineering firm, an engineering report for a parking and traffic study, because I wanted to support my position that extra parking spots were not required for my basement suites. So all I'm saying is, you have to kind of allocate and plan for all of those up front. So when you're looking to raise money or gather money in those first stages, you should also not just plan for construction, but also that developmental cost.
So do you have a rule of thumb for, let's say, is there a percentage of the total project cost that you allow for planning and development or engineering? Like how do you allow for those things when you're looking at doing a project?
I'd have to look at my spreadsheet to see what the actual percentage was, but I did think that it was about an extra 20% for all kind of soft costs. I break it out. There's the hard costs for the land and the construction, and then there's like the soft costs of the development and all of that, like the financing fees, etc., all of those things. So I'm going to say it was about, 25 to be extra conservative, but around 20%, and I would put a contingency in there as well.
So I mean, that's a large chunk of change if you're getting into a project, a development project, and you're carrying say 5 and 5, like a 5% design contingency and a 5% construction contingency. Well, you might get yourself into a little bit of trouble if you don't have another contingency set aside for design and engineering.
That's right. So I think on
planning.
Yeah. So I mean, with these, it's like there's just a really larger kind of project management component of doing this, right? Like, I mean, I can manage like a basement reno, and that's fine. And this is like just similar, but larger on every step. So
how did you get your experience in the project management side and the construction side? Like where did that develop and come from?
Geez, I don't know. Like, I mean, I would like to say I'm currently getting even more experience, but I mean, for me, we built our own principal home about 10 years ago. So that's, whenever you do it one time, like you do learn a lot. Recently built an infill in Edmonton where we have like a 3-suiter with like a legal basement as well as a garden suite. So that itself is also. And then truly, I guess as a project manager, as a developer, it really comes down to making sure you have the right people on your team. So I did a lot of due diligence in finding my team of the financing company that I want to use, my development, my architectural firm, and the builder that I'm choosing to use to represent my work. So all of those took a lot of time and due diligence to be able to like vet different options and to kind of come to the one that I want to call as, my team.
Mm-hmm. What about time frame? I mean, like you're going through waiting for the city to approve development permits and zoning, and you're waiting for them to review engineering reports and such.
Right.
Like what sort of time frame do you allow before you even get into the project for just the planning and development and permitting?
So you should allocate about 6 months for these. Anything that's more like bigger than just like an infill, you would need those like extra few months. And I think some of the things that we do is on a number of properties, we might, and actually, I mean, this is probably a benefit because it was COVID. We actually put in some offers during, 2020 when people were too scared to do much of anything. And what that meant was we got some pretty good terms we had like a couple that were pretty long closing periods. So that gave us time to make sure we checked out everything, even prior to finalizing the deal. And then also we can ask for the owners to give us permission to apply for permitting even before we take possession. So that already buys us an extra month, if not two. So you can get a head start on that process. And so that way, by the time we take over, there's less time there.
Mm-hmm.
And we always try to find lots that already have like a house that we can still rent, so that it's not just like like an empty lot and then you're just sinking money into it for the mortgage payment. So, those are all the kind of things that we look for.
So it can support its own carrying costs, essentially.
Yeah, exactly. And really the whole goal is when you find like something like that, a good investment, then we can pass on those returns to our investors so that,
And okay, so go ahead.
No, I was just going to ask. So that kind of leads me into, I mean, the development in your progression has been amazing. To just take it on and learn as much as you can along the way, and now just be executing it at the level you're executing. I mean, how do you structure these deals to investors that come along? I figured that's where you were going, Phil. So no, it was the natural progression. I mean, I'm really excited to hear, how do you put forward those opportunities? What does that look like?
So, I mean, for these like larger projects, like, I mean, you could do them in a number of ways. You could still do a JV with multiple partners. That's one option. You can create a corporation with a number of shareholders. That's another option. The option that I've chosen to do, because I think it offers a bit more flexibility, is a limited partnership. And each of these have different tax implications. So when you're choosing a structure, it really depends on sometimes like what tax. It's more of a tax question. But also for me, it was like a flexibility one, whereby, the property is owned by the partnership, and then the investors own a share in the partnership. So they're a limited partner. So they understand that me and my company, we're the general contractor, and we take on most of the responsibility and the liability, whereas they have limited responsibility and liability. And what's nice about that is, what I want to offer my investors is something easy for them, where the numbers make sense and they don't have to qualify for a mortgage themselves. And it's just kind of like clean. It's like a share of a property, so you don't necessarily have to get rid of the company, so you can actually even resell your share if you wanted to, kind of thing. So for those reasons, that's how I've structured ours. And I think it's attractive to investors, because then it's just, you get a T5013 every year, and you just file that with your personal taxes, and it's pretty clean that way.
So do you guys have, with this development and your LLP, do you have an exit strategy for your investors, or is it designed for a long-term hold?
So what's interesting is I could have offered it as a short, which I actually did at the beginning, because I kind of thought, well, maybe people just really want something short, like a short-term investment that can get their money in and get their money out. But the thing is, when you take your money out, you're only going to reinvest that somewhere anyways. And I guess I was thinking, if for the more sophisticated investors, they kind of do know that really a place to really grow your wealth is when you actually hold something longer, but also having that quick return component as well. And so I do offer my shareholders, our investors, like the opportunity to just hold this long term, because it's the way that I've structured it. Because if we can build it and have basement units where we get extra rental income, well, then the value of it, based on the income that it can produce, the estimated estimated value I can get from CMHC is higher. So I am getting that refinance component as a return that I would give back to our investors, so they actually have less in the investment, which means that over time, the income we make from the mortgage pay down as well as the cash flow just grows for them because they have less and less money in the project. So their ROI goes up. So for all those reasons, that's why I offer it this way. And when I think of a project that I want to commit to, it's like I want to make sure there's a couple of exit strategies. And I'm not one for just doing straight flips. I know with this project, if I actually sold them individually, they would make money. But for me, a backup plan or the main plan should also be that I can rent it and hold it long term for whatever comes up. I know that I could still rent it. So yeah, that's my strategy. Sorry.
Okay.
And I think that's a good way to look at it too, Carleen, especially, with Alberta being in recession for the last few years, and who actually knows whether we are at the very bottom. I mean, you can only speculate, but one would think we're pretty close to it. So I mean, if you're doing new construction projects, the likelihood is that the value is actually going to increase in the next while. So it probably makes more sense to hold them, to create cash flow positive assets as part of your portfolio and generate more wealth in the long term. I mean, it definitely makes sense from my perspective.
Well, for sure. I mean, the option is always good, right? Just because it sucks to be stuck into a single strategy where you have to sell, right? And then the market drops, and then now you're stuck, or you're stuck holding the bag, or you might end up losing some money on the deal because you can't sell it for as much as you initially projected. So I think having that option is excellent.
Yeah, totally. And then really, I guess you're giving yourself the option to just wait for the right time, right? Yeah, not just any time, but also like the best time.
Yeah. So Carleen, you've got some projects on the go right now. What do you see in 2021? Like for yourself, for everybody else, for the real estate market? Like what's your vision of what's going to happen?
Gosh, that's such a hard question because it's so hard to know. I mean, we were just chatting, just earlier before this about like, okay, the market's gotten hot everywhere. Definitely in other parts of the country, but even here in Alberta and Edmonton and Calgary, I mean, that's what I've been hearing from, the real estate agents as well, and from people looking. Yet, we're not even out of the pandemic, and there's foreclosures happening, etc. And so it's just, I think it's still an uncertain year, so I can't even say. However, for me, it doesn't stop me from doing what I'm doing. Like, I guess what I tell people is like, there's deals everywhere all the time. It's just, you have to know where to look. And, you have to do your due diligence to know what you're doing to find those deals. But to say that just because, whatever the situation is and you're going to wait, well, you can't, like, nobody ever knows. So I guess in this year of uncertainty still, I think there's still definitely deals to be had, and there's still money to be made, and we can still move forward and work towards our goals, and whether that be financial freedom or retirement or just, spending more time with our family, whatever. Yeah.
So I guess if the numbers still make sense, still do the deal. Would you say so? Or
yes, I think so, right? And if you have enough, like if you know what you're doing, and I guess one of the learnings that I've realized over the last couple of years is you get so much further in partnerships, and in working with people. I mean, you probably know, you guys have combined and you guys have created this great company, the Commonwealth. For me, just working with a lot more people just in my projects, but also partnering up with people who may not have the opportunity or just the desire, but they know where they want to get to. Well, then we're just so much more powerful together, right? And so that's kind of a learning that I've made, that you don't have to just solely rely on yourself. And what is there's people out there to help you get you there.
I think that's a powerful message. I think a lot of people are afraid to ask for help, or they don't want to look weak, or I don't know, they just want to see if they could do it on their own because they don't want to give up a share of their hard work, right? But at the same time, I think you don't realize how much further you can go with someone else's help.
Yes. Like, I guess a common saying within kind of like the real estate community is kind of like, I'd rather have like a bite of a watermelon versus like one whole grape, right? And that just kind of gives you a visual of, how much more you could do. And so, yeah, I true-heartedly feel that way. And I do know that like our community of real estate investors, like we're all just so supportive and willing to help each other. And I love that. And I think that makes me like why I love doing what I do. That's all part of it.
Mm-hmm. There's more than enough deals for everyone. So there's no reason not
Yes.
to help each other.
Yeah.
That's great. So Carleen, if any of our listeners want to reach out to you to chat more about what you've got going on, what's the best way that they can reach you?
Probably my website. So trucapitalrealestate.com. And then over there, you'll be able to reach me by email. You can find links to my Facebook group and my Instagram handle. So, yeah.
Excellent. And we'll include all those in the show notes as well.
Sure. Yeah.
Perfect.
Thank you.
No, thank you, Carleen. It's so great to hear your story and how far you've come in a short period of time. It's amazing. So thanks very much for sharing your insights and what you're up to. And we wish you all the best.
Thank you so much. It was totally fun. And I love watching what you guys are doing too. I think that's awesome.
Thank you. Hey everyone, thanks for listening. Just a couple items before we head off. We wanted to let everyone know that we're starting our monthly live events again. It's a great place to connect with other real estate investors and to learn from our various guest speakers. They will be hosted on the last Tuesday of every month, and to sign up or find out more, please visit the events page at cwho.ca. I'll see you guys next time.
Thank you for listening to the Commonwealth Home Ownership Podcast. Be sure to check out all of our past episodes and our ever-growing library of content at cwho.ca. Until next time, remember to get out there, take action, and create a life of wealth by design.